You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Monday, 24th day of March, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. Now the first broadcast, which is from 9:30 a.m. to 11:30 a.m. Eastern, that's our live training room. That is reserved for members only and those who are taking their 1-week free trial. If you haven't taken your 1-week free trial yet, when Michael comes on in about 50 minutes, he'll walk you through the process right on the screen. It's a piece of cake. We'll get your indicators up and running today, and your trial will start tomorrow morning. But not to worry, you'll still get 5 consecutive trading days with access to everything, not just the live training room, but everything a passport holder has access to, you have access to, for 5 consecutive trading days, with only one exception, and that's the members only workshop every Thursday night, 8 p.m. Eastern. There's no credit card required. I want you to have a clear head so you can focus on what's being taught. So at the end of the 5 days, you can make a well-informed, intelligent decision as to whether or not trading is right for you. So again, he'll walk you through that in about 50 minutes when he joins the broadcast. Now, when the live trading room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and then come back at noon for this broadcast, which is open to the public. That's everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before the broadcast starts. In the email, there's a link, so at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. The benefit there is you have access to the question box so that you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy. You can't join live, but want to get caught up later. You can do both of those via our YouTube channel, which is very easy to remember. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there's over 2,700 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. And thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, nor do you need to. But it's a tremendous resource as you get to know us better to be able to go back and see from whence we came to where we are now. youtube.com/CFRN. This is our daily schedule for the afternoon broadcast. So we're going to dive right into our daily devotional. The topic we're on right now is doing things that matter. Today's scripture, John 13, verses 34 through 35. Let me give you a new command. Love one another. In the same way I loved you, you love one another. This is how everyone will recognize that you are my disciples, when they see the love you have for each other. Again, that's John 13, verses 34 through 35 from the Message translation. So we started talking Friday about loving recklessly. From the 1960s till the early 2000s, there was a show on PBS called Mr. Rogers' Neighborhood. You may have grown up on that. For decades, Mr. Rogers ruled Kid TV. He began every show by singing the same song. It's a beautiful day in the neighborhood, a beautiful day for a neighbor. Would you be mine? Could you be mine? Won't you be my neighbor? For Fred Rogers, this was not just good for the show. Instead, this was something he actually believed. His faith led him to believe in this simple yet huge idea that we ought to love our neighbors. Loving God and loving our neighbors. Everything hangs on these two commands, as we talked about on Friday. Jesus actually connects these two commandments in what he defined as the greatest commandment, and essentially made them one by saying, if you love God, then you better love your neighbor too. What if we took this idea of loving recklessly to our literal neighbors, meaning the people who live closest to you? The truth is, the vast majority of us have little to no relationship with our neighbors. Most of them are nameless faces that we know more about how good or bad they are at yard care than who they really are. Occasionally we'll wave at them, or we might even have a conversation with them. But most of us don't even know their names. We call them, hey man, or hey neighbor, or hey ma'am. A study found that the vast majority of people know 0 to 2 of their neighbors' names, and only 5% of people know 8 or more names of their neighbors. So many of us are ignoring the people right next to us. Perhaps loving your neighbor isn't as difficult as we make it. It can begin by learning names, because that matters. It can lead to caring for your neighbor, because that matters too. Getting to know their story, bringing them cookies, inviting them over for dinner, hearing their needs, sharing your life, befriending them. All those things matter. Often the greatest and most profound things God will do within you are discovered in the simple obedience of you doing the things he said mattered, and Jesus clearly said that loving your neighbors matters. Think about this. What is something practical that you can do to show love to a neighbor. Let's pray. Heavenly Father, thank you for the new command you have given us, to love one another as you have loved us. Help us to show that love in our words, actions, and attitudes. May our love for others be the true mark of our discipleship and a light that draws people to you. It's in Jesus' name we believe and pray. And everybody said, amen. Amen, and happy Monday. Okay, let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices. Now, when we get to the charts, you'll see what we thought would happen. It has happened, and that's why I'm able to give you these numbers. The Dow's up 584 points. That's pretty close to 1.5%. NASDAQ's up 376. That's a little over 2%. S&P 500 up 96, 1.75%. And the Russell 2000 up 45 points, almost 2.25%. Been a long time since we had a day like that. And again, when we go to the charts, you'll see why. In the commodity basket, crude oil up 94 cents, trading 69.22 last. That's a gain of almost 1.5%, or $950 per contract traded. Gold down $1.70, trading $3,019.70 last. Silver up 6 cents, trading $33.55 last. In the Asian markets at the close, the Nikkei dropped 68 points. Shanghai rose 5. The Hang Seng gained 215 points, almost 1%. And in the European markets at the close, FTSE up 3. The DAX down 17. The CAC down 18. So we had a mixed day in Asia. It was a mixed day for the UK. But it is a big green Radio Monday here in the US of A. And if the stage has ever been set for a turnaround Tuesday, I think we might have all the ingredients. We'll see. Let's take a look at the news first. U.S. officials are meeting separately with Ukrainian and Russian delegations in Saudi Arabia this week to begin negotiations on a limited ceasefire plan with hopes of reaching a deal by April 20th. Talks with Ukraine were held yesterday evening, while talks with Russia will be held today. The talks come after Russia and Ukraine traded drone attacks over the weekend. That's a great way to start a ceasefire. Columbia University has agreed to a series of demands from the Trump administration in an effort to restore $400 million in funding that was revoked earlier this month. The administration had canceled federal grants and contracts over concerns that Columbia failed to adequately protect against anti-Semitism on campus. Now, why they're so concerned, I'm glad to see them make this move, but it still begs the question, why are we giving them $400 million a year? They have an endowment worth well over $1 billion. The university's policy changes includes banning identity concealing masks during protests, hiring 36 campus security officers who can arrest or remove people, appointing a new senior vice provost to oversee the Middle East, South Asian, and African Studies Department, and implementing a formal definition of anti-Semitism. It is unclear whether the changes are sufficient enough to reinstate the federal funding. I mean, even if they're doing the right thing, which they should be doing the right thing, again, when people are going hungry, why should the very taxpayer whose family could be going hungry, why should they be giving this kind of money to an institution, educational or otherwise, that has an endowment of such incredible size? The move has raised concerns about government interference in academic affairs. And you know what? It's because of the academic affairs that we have the government we have, or have had, up until the last election, and sets a precedent for other colleges and universities facing similar scrutiny, including Harvard, Stanford, and the University of Michigan. Last week, the Trump administration paused $175 million in funding to the University of Pennsylvania for allowing a transgender woman to compete in women's sports. Now, I would have worded that article a little bit differently. What really happened was they allowed a transgender man to compete in women's sports. But that's a story for another day. Pope Francis returned Sunday to his Vatican apartment after a 5-week stay at a hospital for double pneumonia. He was initially admitted to the hospital on Valentine's Day for a respiratory infection, which rapidly worsened, requiring regular ventilation, multiple blood transfusions, and several other procedures. Francis will now begin a 2-month convalescence after enduring 2 nearly fatal critical episodes. On Wall Street, Trump administration officials have tried to get a message out in recent days that markets may be overestimating the planned scope and scale of reciprocal tariffs looming in just over a week's time, in an effort that comes amid growing fears that investors could be in for a shock when April 2nd rolls around. But this push to calm markets faces plenty of open questions, from whether Trump is willing to allow a possible narrowing of his immediate-term tariff plans, to how much these latest signals actually diverge from the formal plans unveiled weeks ago. For his part, President Trump himself appeared more interested in broadening the scope of that key deadline Monday morning today, when he posted that part of the new April 2nd tariffs, which he has taken to calling Liberation Day, will include new secondary tariffs on anyone that purchases oil from Venezuela because of immigration issues. Today's missive came after a weekend that included stories first on Saturday in Bloomberg and then Sunday in the Wall Street Journal, featuring administration officials telegraphing a narrower set of tariffs to be unveiled on April 2nd. The crux of the overall change is that some nations and many sectors could be in for more of a reprieve than expected next week when reciprocal duties are announced, even as plenty of key countries continue to be set for, well, a rougher ride. NVIDIA leading the tech stocks. What do we got? AMD up 7%, NVIDIA up almost 4%. Tech stocks were leading the U.S. stock market rally today with headlines on more targeted tariff plans from President Trump and a new AI breakthrough from Jack Ma's Ant Group, helping boost the sector to start the week. Shares of Meta and AMD were each up better than 3% in early trade. NVIDIA now up over 4%, and the tech-heavy NASDAQ Composite was up 1.5% shortly after the market opened. Monday's broad market rally followed reports late Sunday that Trump would narrow the number of U.S. trading partners subject to reciprocal tariffs on April 2nd. The administration is also reportedly set to limit some industry-specific tariffs that were set to take effect, including those on cars and chips. 23andMe. Now, I'm sure some of you sent your little swab off to 23andMe so they could catalog your DNA and tell you who your distant relatives were that you've never met and where your bloodline comes from. This really surprised me because it appeared to be quite a viable company. But on Sunday, they filed for bankruptcy in the U.S. after struggling with weak demand for its ancestry testing kits that once featured in Oprah Winfrey's annual list of favorite things, and following a 2023 data breach that damaged its reputation. There it is. That's the reason. The company's market value peaked in 2021 at nearly $6 billion amid booming interest in DNA testing kits. But demand has waned in recent years, hurting firms such as 23andMe and its Blackstone-owned rival Ancestry DNA. Sales of the consumer kits frequently picked up during holiday season. I got one for a Christmas present years ago. But 23andMe has struggled to retain customers mainly because people would use the kits once and see little reason to order another one. Well, yeah, that's true. You do get an email every month that tells you any new people that you've genetically matched up with. But in 2023, hackers exposed the personal data of nearly 7 million 23andMe customers over a 5-month period, dealing a major blow to the company's reputation and compounding its growth problems. The breach raised alarm among customers concerned about their privacy and how DNA testing firms handle their data. And now with the company going bankrupt, that data is going to fall into the hands of somebody. The stock's trading at 90 cents, down 88 cents on the day, or 49%. Now, if you like bottom fishing, this might be one. But do your own due diligence. 23andMe eventually agreed late last year to a $30 million settlement in a lawsuit related to the breach. Company shares fell to 88 cents in trading today after co-founder Ann Wojcicki, who made multiple failed takeover bids, resigned as CEO. She'll be replaced by Chief Financial Officer Joe Selsavage on an interim basis. The San Francisco-based firm has also laid off 200 employees and stopped development of all therapies as part of what will be a major overhaul. Wojcicki has been pushing for a buyout since last April, but has been rebuffed by 23andMe's board. She reportedly used her contacts, including ex-husband and Google co-founder Sergey Brin, to help drive initial investments. And of course, everybody is so caught up in these crime shows and crime podcasts, and many crimes have been solved because somebody sent in their DNA or somebody sent it in for them. They didn't think that through all the way, I guess. Hyundai is reportedly set to become the latest company to announce a major manufacturing investment in the U.S. Various reports indicate that executives from the South Korean automaker will meet with President Donald Trump at the White House this afternoon to announce $20 billion in spending, which includes constructing a $5 billion steel plant in Louisiana. Hyundai would join chipmaker giant Taiwan Semiconductor Manufacturing, which trades as TSM, and Japanese conglomerate SoftBank, which recently noted they would be pumping billions of dollars into the U.S. as President Trump prioritizes increasing domestic manufacturing. At last, Plenty Unlimited Incorporated. Yeah, I never heard of them either. A vertical farming business that's drawn backing from Jeff Bezos, SoftBank Group, and Walmart has also filed for bankruptcy, with a lender-backed plan to either raise capital or sell the business. The company on Sunday night sought court protection in Texas, listing more than $100 million in assets and liabilities on its Chapter 11 petition. The business comes to bankruptcy with a deal that will explore a sale of Plenty's assets or an alternative restructuring that would raise additional cash. Now, Plenty joins other vertical farming companies that have gone bankrupt in recent years, as well as a string of agriculture firms that have filed Chapter 11 so far this year. Tree Sap Farms, a tree and plant supplier, sought protection last month, followed by soybean seed developer Benson Hill, which filed Chapter 11 last week. Plenty's backers include New York investment firm One Madison Group, Walmart, and SoftBank's Vision Fund, which has funneled more than $400 million into the company. The company has been in talks to raise additional financing that would virtually wipe out existing shareholders. Plenty's interim CEO said in a court filing that the company has closed a farm in Compton, California, focused on growing leafy greens, and is shifting its focus towards a state-of-the-art strawberry growing facility in Richmond, Virginia. The fruit is a premium product for which demand persistently exceeds supply. And the company has been able to begin producing high-quality strawberries after nearly all construction work on the Virginia farm was halted in November. And if I'm not mistaken, I think it was on Shark Tank, a recent episode, a gourmet strawberry in this very fancy packaging. $20 a pop. If I didn't see it there, I saw it somewhere else recently. $20 for a strawberry. But it's a very special strawberry. And it's big and it's beautifully packaged. And I don't know. Is there a market for such a thing? Honestly, I don't know. Here's what I do know is we can go right now to the Logic 247. That's our 24/7 around the clock E-mini alert service. Not just E-minis, also crude, gold, silver. We're now in week 347. Over the last 347 weeks, we've issued over 19,200 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a simple process we teach all of our passport holders in their one-on-one mentoring sessions. Last week we ended up with 44 total alerts, 35 actionable, of which 17% would have been stopped out, again based on market structure and that simple process we teach all our passport holders. This week, since the market opened last night at 6 p.m. Eastern, we've issued a total of 14 alerts, still waiting on the outcome of 5. So that gave us 9 actionable alerts, of which so far we don't have anything stopped out. Now, the purpose of the Logic Alerts is to help you learn how to read a chart properly. You should be able to look at the chart of any market in any time frame, and with the use of our humble indicator set, instinctively know what the next high probability move is. Now, what we've learned over 19,200 alerts is that 20% of the time the market doesn't do the next high probability thing. In fact, it does quite the opposite, and you're left scratching your head. But that's the secret of the professional trader. They don't spend time or treasure chasing some holy grail that's going to give them 100% profitable trades. They know that based upon their strategy that they use, some percentage of their best work is going to get stopped out. Getting stopped out is as much a part of trading as breathing is a part of life. So they don't spend any time or treasure chasing the black cat in the dark that doesn't exist. They just move on to the next high probability opportunity. With the Logic Alerts, you're able to identify where the next high probability resistance is, where the next high probability support is, and see the window of opportunity that lies between those 2 points. So, yes, you can trade the alerts, but make sure you use them for the reason intended, and that's to help you learn to read a chart. If you want to be a lawyer, you got to be able to read case law. If you're going to be a trader, you got to be able to read a chart. And while nobody knows what's going to happen next in the market, nobody, it's impossible, you can know with a great degree of certainty what the next high probability move is. And about 20% of the time, it's going to just do something else. So, week's off to a good start. No telling where we'll end up the week. But again, over the last 347 weeks, we've averaged 20% or less of the alerts being stopped out. 347 weeks is a very long time, but even longer, way before we had Logic 247, we had our original alert service, the concierge trade alerts. Now, the Logic alerts can come out anytime around the clock. futures trade around the clock. We have traders around the globe. Our day session is their night session and vice versa. So while the logic alerts could come out at 2 a.m. or 2 p.m. as opportunity presents, the CTAs are published shortly before the Globex Open most evenings, with the exception of Sunday. And that time is not correct. That should say 6:10. My bad. Let me fix it. Otherwise, I'll be confused later in the week. So the Monday session starts Sunday night at 6 p.m. Eastern. That's when the markets open. But most nights during the week, I do my very best to get these numbers out, these targets out, 5 minutes ahead of the open. Last Thursday we did it. Wednesday night we did it. Tuesday night we did it. And Monday night we did it. So for the last 2 weeks, I think the only night we didn't get them out before the open was Sunday night. Because Sunday nights I'm doing the weekly zones. I've got a bunch of things I'm doing. So it makes it a little more difficult. But last night they did in fact come out 10 minutes after the open. So what that means is 10 minutes after the open, all of our members and trial members had all of these targets for the S&P, the Dow, the Russell, crude oil, the NASDAQ, gold, and silver. Today I will do my best to get them out 5 minutes ahead of the open, and I usually put a note in the Telegram discussion group that says CTAs will be out at 5:55 p.m. Eastern, or I'll put a note that says they won't be out at 5:55 p.m. Eastern. Sundays and Mondays are the two most difficult days for me to get them out early. Okay? So as we go to the charts, just remember, everyone had the targets 10 minutes after the market opened. Okay? All right. So with that, let's go to the daily chart of the S&P, where, as we talked last week, once this black step line crossed red and falling, and then red and falling turned to blue and climbing, we suggested that the next spot for price to find resistance would be at the 38% reverse fib and the daily BBC. And no witchcraft, no voodoo, but there it is. Okay. Now, if this rally, okay, continues, now we expect resistance. The green line's called the BBC. It stands for bull bear cross. When price crosses above the green line, we're bullish and expect higher prices. When price crosses below the green line, we're bearish and expect lower prices. That part's pretty simple. Now, the pullback to the BBC holds more often than not, but eventually it will trade through. So whether it's pulling back from below or pulling down from above, you expect it to hold until proven otherwise. And so, based on that, we expect this to hold until proven otherwise. We got blue and climbing here. So if we do get a leg to the downside, tomorrow I said possibly turn around Tuesday. Okay, this is strong support. The black step line, which was support for 1, 2, 3, 4, 5 days last week, every day of the week. Now, on Friday, we reached way down here. We had a big red candle, but we managed to close right at the 24% reverse fib. Now, the reason I say reverse fibs is when you're in an uptrend, you draw from the low to the high. When you're in a downtrend, you draw from the high to the low. So these are the first time we've had reverse fibs on the chart for quite a while, because we've been in an uptrend for quite a while. But as you can see, things changed. So we've got potential support here. The step line and the 24, that's really support times 2. And then the low of Friday is basically, it's just above where blue and climbing is right now. So one of two things will happen. The pullback will hold, and we'll get a leg down and test either the step line, the 24, or blue and climbing. Or if this rally that we're experiencing today has legs, we'll trade above the daily VVC, and then the next major obstacle or target will be the 50% reverse fib. And of course, above that, you got the 62, and you've got this high. Actually, you've got almost triple top across there. Well, you definitely got a double top. You got this high, and then you got the bearish cross. That's where the red line gets below the green line. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. But before we can worry with that, we've got to see what happens here. So how we close today, that'll be very important. Okay, if we close well off the high, then I would expect to turn around Tuesday tomorrow. If we manage to close right where we are or slightly above the 38 and the BVC, then this rally may continue and push us up to the 50, which should definitely be good resistance. Now, the daily chart's important because institutional traders, the deep pockets that move price, they look at daily, weekly, and monthly charts the way we look at 30-minute charts, 5-minute charts, tick charts, and range charts. Why? It has everything to do with account size. Because of their account size and the size they trade in, they're the ones who literally move price. So whether you trade futures or stocks or crypto or Forex or ETFs, I encourage you to just spend 2 minutes each day with the daily chart of whatever you're getting ready to trade and peek over the shoulder of the deep pockets to see what they're up to. Sometimes it's easier to go with the flow, okay, or simpler. Trading's never easy, but it can be simple. Not only are you able to see what the deep pockets are up to, but you're also able to identify the areas that could be potential resistance, like this high right here. See, on your smaller time frame, you'd have no way of knowing that 58.44.5 was potential resistance, but it is. You would not know where the 50% was on the daily chart. And remember, the deep pockets that move price, they're looking at the daily, weekly, and monthly charts the way we look at the smaller time frames. Okay? Now, all the alerts are created on the 30-minute chart. Nothing magic about 30 minutes. It's just a time frame I chose years ago. And they say if it's not broke, leave it alone. So I've left it alone, amazingly. Now, these are the vertical line separates today, Monday, which began last night at 6 p.m. Eastern. See down there at the bottom of the chart, 1800 hours. Vertical line separates today, Monday, from Friday. Back here's Thursday. Now, the weekly trading zones. These are last week zones. Why? Because all the alerts that go out on Sunday night are based on the previous week zones. The weekly trading zones are published for our members every Monday morning at 6:15 a.m. Eastern. We've published the zones for our members every Monday, since December 14th of 2009. Little over 15 years now. So tomorrow on the broadcast, you'll see this week's zones. Okay, but all the alerts that went out last night are based on last week's zones. But any alert that goes out today and for the rest of the week will, of course, be based on this week's zones that came out at 6:15 a.m. Eastern. And again, once they're published, they're carved in stone for the entire week. When price rallies up to a weekly zone, we expect resistance till proven otherwise. And when price drops to a weekly zone, we expect support till proven otherwise. Okay. Now, we had a gap higher open last night, and one of the alerts that has not filled yet is the gap fill. With futures, one of the most high probability trades is a gap fill. And you don't see gaps often. With stocks, you see them every day. But because futures trade around the clock, you usually only see gaps Sunday night and occasionally during earnings season when a big name publishes after the bell. But do I think this will get filled this week? I think so, for reasons I explained on the daily chart. But we gapped higher and never looked back. Well, the next candle was an inside candle, and then the step line crossed blue and climbing. Now when that happens, price will typically retrace back to the BBC. See how the pullback holds, and it held, and it held, how it held, and then it finally traded through, but when it pulled back, it held, and it held. So no matter which side it pulls back from, the pullback holds more often than not. And when the market is so bullish that it can't even make the pullback to the BBC, then you end up with something like this, which is quite impressive, to say the very least. Price is now getting below. You see how the step line in blue and climbing is directly above price? That's potential resistance. And the step line is in the process of crossing blue and climbing right now. So I would anticipate a retracement back to the BBC. This news today that sent the markets higher. Okay. Everybody's going to be doing some rethinking and recalculating. Now, we could go to the moon. That's certainly possible. But before we go to the moon, if we go to the moon, and the markets never go to the moon, look for a pullback to the BBC. And again, remember the pullback holds. See all these? It holds more often than it doesn't, whether it's pulling from below or pulling from above. On the Dow, we had that same gap higher open, and one of the alerts that did not fill was the gap fill. Now with futures, usually a gap on Sunday night will fill within an hour or two. Sometimes it takes an entire session, and occasionally it can take a day or two. But this isn't true of gold or silver or crude, but with the indices. Go back historically, look at your charts. That gap has an extremely high probability of filling. May not be today, may not be tomorrow, but I believe we'll see it fill by the end of the week. Up here, the step line has crossed blue and climbing. We're printing a red candle. Obviously, we hit the long target on the way up. Now we're starting to get our pullback. We already had one right here. Okay, this candle closed here, opened here, pullback held, and gave us another leg. And that's how price moves. It moves in legs. leg, retracement, leg, retracement, leg, retracement, leg, retracement, leg, and now we're getting our retracement. On the Russell, we gapped up right to the one of the weekly zones from last week, 2086 / 2087. Not the highest weekly zone. The highest weekly zone last week was up at 2155. So one of three things happens when price encounters a weekly zone. 70% of the times consolidation, 20% of the times rejection, 10% of the time the slice. So we consolidated at the zone, the step line crossed, but we did not get the pullback. That in and of itself is unusual. We closed above red and falling, which turned red and falling back to blue and climbing. One is bearish, the other bullish, and we hit the target. We pulled back into blue and climbing, found support, hit the target again, traded through it, and so far the Russell just wants to go higher. See how you got the perfect stack, price, step line, blue and climbing, BBC. The step line has not, the other markets we looked at, the step line has already crossed or is in the process of crossing blue and climbing, but not on the Russell. And again, last week's highest zone was way up at 2155. On the NQ, gap higher open, still not filled. Made a run at the target, more than enough to get your goal for the day. But on the first attempt, we didn't quite make it. Step line crossed and held as support until head of the London Open. Bang, we hit the target. We get to the zone, consolidate, continue higher, but look right here, the step line has crossed blue and climbing. So we would expect a retracement back to the BBC. Again, the pullback holds more often than not, but eventually it will trade through. See, all of these pullbacks here, held and held. So that doesn't mean this one's going to hold, nor does it mean it's not going to hold. Each one is a unique set of circumstances. See how price goes from support to resistance, back to support. That's how the zones work. Crude oil. Here's where we opened last night. No gap there. The indices and the commodities like crude, gold, and silver, they behave a little differently. Blue and climbing was directly above price, served as resistance, turning into red and falling, which took us to the short target. Now the short target, you see this low right here. This is the bullish cross from Friday. When the blue line gets above the green line, the first time price revisits that area will almost always be good support. But it wasn't a lot of support because it gave a very tiny bounce. And then we continued lower, and buyers came in just above this low from Friday. And then we got a leg and a retracement. Now the pullback held, but you'll see it came all the way down to hit that short target and then closed at the BBC. So the pullback held. Next candle. It was a red candle all the way down. These are 30-minute candles. And then it closed right above the BBC again. So we hit the short target once, twice, 3 times. But on the way up, all of these pullbacks held. Then we hit the target, traded through the target, almost made it to the zone from last week. Resistance kicked in. Down we go. Here's the BBC. We get a leg. We get a retracement. When price drops to a zone, we expect support until proven otherwise. It gave us support. Now we've got a doji here. Could that be a turning point? It could be. Now this candle, which still has 4 minutes of life left in it, has already come down and tagged the zone and bounced. But you'll notice that the step line is directly above blue and climbing. So if we consolidate sideways for another candle, then the step line is going to cross blue and climbing, and that's when we would look for potentially another retracement back to the zone and probably the BBC. Gold. This was the open last night. We attempted to go higher, but there just wasn't enough buying interest. Now, it takes financial commitment for prices to rise. For prices to fall, it takes no financial commitment whatsoever. If institutional traders hit pause on the buy side, then price will just deteriorate. So blue and climbing turns to red and falling. You can see here we found support at the zone. It bounced us up into red and falling. And that resistance at red and falling, which is bearish, sent us down to the target. Looks like pretty much to the tick. You see where the step line crossed Friday, red and falling? Okay, that's an important price, important area. And 3019, what was the low? So we missed it by 2 ticks. The low was 3019.2. Okay. So support will always send the market looking for resistance, which it found at the zone, consolidated like it does 70% of the time, then gave us a leg and a retracement, pullback held, and that took us up to the long target. Is it to the tick? No, we missed that one by 1 tick. And what's that based on? This bearish cross over here. Resistance sends us back to support at the BBC, the pullback held, and that sent us up a little bit higher. Okay, right up here where blue and climbing became red and falling. That sent us back to the BBC, and the pullback held. We bounced up to red and falling, but red and falling ultimately took us through the BBC, through the zone, to the short target, where we've been consolidating now for a few hours. And last but not least, silver. Here's where we opened last night, 6 p.m. Eastern. Got a leg, got a retracement, and we got a leg. We missed it by 1 penny. The target was 33.73, and we got to 33.72. And then we pulled back into blue and climbing, found support, hit the target, hit the zone. Resistance sent us back to support. Support sent us back to resistance, back to support, back to resistance. Now we find ourselves below the BBC. Red and falling took us right down to the short target, pretty much to the tick. The low of that candle is 33.41, so we overshot the target so far by a penny. Support gave us a bounce up into red and falling, which is resistance, potential resistance, and that has now sent us back down to the short target at 33.42 half. Okay, so that's each and every one of the markets. Again, how we close today is going to be very important. If we overcome the 38 and the daily BBC, we've got this area right here. Might want to write it down. 58.44 half potential resistance, and then the 50% reverse fib at 58.93.50. That's if we close above the BBC. If we don't, if we close well off the high, then we could see a turnaround Tuesday tomorrow. However, even if we have a day where the market drops, it's going to run into blue and climbing, and that should be good support, which will then potentially give us another run at the 38 and the daily BBC. But as it sits right now, that is resistance times 2. And Michael should be here. Let me see if he's having trouble logging in. Yeah, let me check Telegram. Okay, he's logging in right now. So stand by. There we go. Now he's getting in.
Okay.
There you are.
There I am. Sorry about that.
Oh, that's okay. No problem. I didn't know if you were having problems getting logged in to go to.
No, I was having problems at the pharmacy.
Oh.
But
Well, you get a lot done, and you got a lot done in that short break you have there.
I always try to get something done. I try to plan something for that period.
So I left this up just so you could see it. It's the daily chart of the S&P.
Yep.
And remember Thursday night in the workshop, we talked about how the step line had been support all week, and it even was on Friday. We closed right there. Red and falling became blue and climbing. It already had Thursday night when we had the meeting, and we talked about the logical spot.
Yeah, I was thinking that this morning about 6 a.m. I saw it was up there this morning. It was getting up there.
There was some news that created a tech rally, and the other markets tended to follow. The gaps from last night didn't get closed, and so I said at the beginning of the broadcast, the table is set for a turnaround Tuesday tomorrow.
It sure is.
Doesn't mean we fall off the earth, but we come back and find support at the 24 or the step line or at blue and climbing. And a lot of that will depend on how we close today. So
yeah, it is all set up for it, right?
Yep.
So anybody that wants to buy puts right now, going into, because the next big news event this week is on Friday. You know, we have other stuff that's going on, but the really big one is on Friday. The PC stuff that's going on Friday. So it could set us up for a sideways action. No big, kind of slow, gradual move down in sideways action, and maybe something good on Friday to bump it back up. Who knows? But I would say right now, it's looking pretty bearish for the rest of the week, is what I would think.
Well, we're technical traders, but there's been so much major fundamental stuff going on, stuff that we normally don't think about or care about.
Right.
It has kind of ruled the markets, and
It has.
We just got to keep trading what's in front of us.
That's it. Just trade what's in front of us all the time.
Okay, your charts look good. So,
All right,
take
here
it
we go.
away.
Got it. Sorry about the delay. Good afternoon, everyone. Today is Monday, the 24th day. Excellent. 24th day of March 2025. So we have 1 week left in this month, 1 business week left. If you haven't taken a free trial with us and you would like to take a free trial with us, then go here to mytradingiq.com, click on the purple button right there. There's no credit card required for the trial. When you click on that, it brings you here to the registration page. On this page, all we ask for is your first name, your last name, your email, your phone number. Down here at the bottom, I still haven't done that. Down here at the bottom, all we need is your TradingView login ID. When you're taking the trial, give us a TradingView login ID. Okay, if you give us that, then we will be able to get your indicators indicating for you on your charts in front of you. Now, if you don't have TradingView, go here to mytradingiq.com, click on Trading Platforms, and just follow this right down here to where it says TradingView Platform, and click on that. Watch that video. It's only 3 minutes long. Eventually, it brings you to this right here where you're going to click on this, and that's going to make it to this page. Check monthly, and all you need is the essential. I mean, you don't have to get the essential. You can go for the free version, but then when you pay for data, it's going to cost you more to get real-time data and the free version than it would cost you to get the essential and real-time data. It would actually cost you almost 30% more. This just kind of throws me. Now, the data itself is $29.95 if you go for the free version. So if you go for the essential version, the data is $7. I would do that. Anyway, that's how you get the charts. Okay, once you get that, give us your TradingView login ID. Now, the TradingView login ID is going to be, for you, it's going to be something up here. Hover over whatever it is up there, and when you do that, it's going to have your ID. It'll tell you exactly what we need. For us, because we're premium, ours is over here on the left, but yours is going to be over here on the right, somewhere up here probably. Okay. All right. Now, results. We stopped out on the ES and the NQ at the same time toward the end of the session today. We were up over $1,000 a contract, but then that brought us back down. We had a couple more trades at the end, but they were smaller gains, so we didn't get back up to where we were. Anyway, all that to say, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today we're up 117 ticks on the NQ, 14 ticks on the Russell, 34 ticks on gold, and we lost 10 on the ES. I put us at $870 a contract on the morning session. Today it took 4 minutes and 1 trade to get to $3,750. And we took a total of 31 trades this morning. So less than half the trades we took on Friday, that quadruple witching day. Just a tremendous opportunity. Now, less than half the trades and half the money. On the month, we're now at $20,357 with 1 contract over 11 business days, averaging $1,850 per contract for a 2-hour business day. On the year, we're now at $77,840 over 48 business days, averaging $1,621 per contract per 2-hour business day. If you were to quit trading when you get the goal for the day and you were to add 1 contract per month, so far this year, you would have only had to work 7.28 hours and you would be at $15,015 in profit. Right, be trading 3 contracts right now. So for 7.28 hours, you would have made $15,000. That's averaging $2,061 per hour. That number went up pretty good today after we had this big number after 4 minutes. That bumped that number up pretty good. And that was it. All right. So this morning, I don't have, since I popped in late, I don't have that much as far as trades go. We didn't have that many trades this morning. On the gold was actually our biggest producer today. Well, money-wise, I think it was. We're at $340 with gold. I guess it wasn't. I guess the NQ ended up being the biggest producer. But anyway, the 34 times 10, it's 340. It's 34 times 50. But I don't know. I'll have to go back and check and make sure everything's right on that. But anyway, I think it is. Our first trade on gold was a break even, and our next trade on gold was a +1. All right. Then we had a +10 to get us to 11. Then we had a +5 to get us to 16. Then a break even and a 12 to get us up to 28, and then a +1 to get us to 29, and then a +5 to get us up to 34. And that is what we ended up with gold. During the break, there was one trade right here during the break, a nice long trade right there. A short trade right in here that would have been enough to go to break even. A short trade right in here, again, enough to go to break even. A long trade in here. It might have been enough to go to break even, might not have. A long trade over here that would have stopped you out, and a short trade right here that was enough to go to break even. So there wasn't really a lot during the break. Now the Russell. Let us take a look at the Russell. We didn't have many trades at all on the Russell today. This is it right here. That's all our trading on the Russell. We had a +2, then another +2 to get us to 4, and then a +10 to get us to 14. And that was all we did on the Russell. During the break, it wasn't much at all. We had one short right in here during the break. Didn't go anywhere. That would have stopped you out. Actually, that's wrong. We had a long right there. That went just about enough to get you stopped to break even. So there wasn't a lot going on after the initial volley. The ES, we had small trades on the ES in the beginning. First one right here on the ES, we were +2. Then we had break even, stop out. Hang on, we had another +2 in there somewhere. We had that +2, we had another +2 to get us to +4. And I was saying, as we started this trade right here, with these little gains, it's going to take forever to get back if we stop out. And then we stopped out. We're at -6 at that point. And a bunch of small break-even trades. Look, there's 5 break-even trades right there. Made a +4 that got us to -2. Then we stopped out again, put us at -12. Then we had a +2 that got us to -10. And that was it. Just not a lot followed through today on the ES. Scrolling through here during the break, there was a short right there that would have worked out. A long right there that would have worked out. A short right there that would have worked out. A long right there that would have worked out. I missed one right here. A short right there that would have stopped out. A short right there would have been break even. A long would have been good. A long right here would have been break even. A short right there would have stopped out. A long right there would have worked out. A long right there would have been good. And that was it on the ES. So there was some decent opportunity on the ES. I got a bunch of little trades and break evens for the most part. Now the NQ, we only had, well, we had a couple of stop outs on the NQ. This is the whole day here on the NQ. All right, we started out with this first trade right here, picked up 75 ticks on the very first trade. Then we stopped out right after that. Brought us down to 15, had a break even. Then we had another 75 there, got us up to 90. Then another 75 there, got us up to 165. Then we had a +4 that got us to 169, and a +4 again, got us up to 173. Then we stopped out again. That was it. One of those stop outs that I told you happened toward the end. Brought us down to 113, and then we had a +4 that got us up to 117. And that was it, the NQ. Now, if I put this thing back on here, where was it? The lead right there. You can see during the break that there was a long trade right here. I'm sorry, that wasn't during the break. During the break, there was a long trade right here that would have worked out. A short trade right there that would have worked out. A long trade right here that would have stopped out. A long trade right here that would have been okay. And that was it. So the NQ was okay during the break. It wasn't great, but it was okay. None of the markets were really great during the break, it seemed like today. I don't see any questions in there right now. I want to see who's watching. Tim is in. Good, Tim, you're following the whole thing today. All right. And Stephen, the question you had this morning, we can address that on Wednesday's meeting if you want. Okay. This right here was just a long trade on the gold. We don't have anything right here. There's nothing blue leading by itself into the overbought or oversold. We don't have anything that we can do there right at the moment. Okay. So we're just holding off for a minute or two. And we'll see what happens. I thought I shut that stuff off on this. Let me see. Did I? I did. Okay. Just curious. All right. We're waiting over here right now. This is part of the ultimate slingshot right here. Is the S3 cycle. Part of the ultimate slingshot. One of our guys is using that, and he was wondering if it would be helpful. So I'm running it to see if it helps me at all. It's inside the ultimate slingshot. It's this guy right here, the S3 cycle. Okay, those of you guys who have that. All right. So we still don't have any trades. And it is $3.24. And we don't really have anything there, or there at this point. Where do you turn that on? You get access to the base version of the TV Trades Range trigger. It should be in your invite only. Okay. Under your invite only, you should have one thing in here that says TV Trades Range trigger. Okay. What is your ID for TradingView? I'll check and make sure that you do have that. You do have access to that. Oh, that's right. That's right. I remember that one. Let me scroll down a little bit more. You do have access to it. Yep. So you just need to turn it on. It's in your invite only section. If you go to indicators, it's in your invite only section. You just need to, what it'll look like is, here, let me just go out to a fifth one here. And just go to indicators and go to TV Trades Range Trigger and put it on. And when you put it on and it loads up, this is what it's going to look like for you. Okay, all by itself. So if you put that on and you also put the ultimate slingshot on like that, okay, then you have both of them. Then you have to slide this one up. Just click on these three little dots right here. First click on the name, then click on the three little dots and do move to existing pane above. And I'll put it right on top of it like that. Okay. Good, Levi. Well, it's a proven principle, so it should do well. But you're doing it with a stop now? Good. Doing it without a stop. I mean, it usually works out anyway, doing it without a stop. But you have unlimited risk if you do it without a stop. Okay. Did you find it, Tim? Okay, so the blue is leading up by itself right here. That makes it a short. Okay, if you want to jump on that. Is a short actually with the trend, and this is a 50% retracement of this leg down. So this should turn into a pretty good trade. Here it is. It should turn into a pretty good trade right now. What it should do is give you, here, I'll just draw it this way. Come on. This leg right here. There to there. That should repeat itself down to about right here. That's what it should do. Somewhere down here is what it should do. Okay. Don't know what it's going to do, but that's what it should do. Oh, good. Okay. Nope, that one didn't work out at all. That one stopped me up. Okay, so looking for the next opportunity. The ES was the first one right there, and that it actually went 5 ticks into profit, so I did something wrong with that. It went 5 ticks into profit, and I didn't bump it to break even. You can see when I leave those things on there. I actually created something last night. That's a standalone thing that will give you these labels if you want them. Yeah, it's the TV trade range trigger. I'm sorry, not that one, but this one up here, the TV trades range trigger. You don't get access to that one. And the thing that's up here, you don't get access to either, unless you join TV trades. That's a different thing. But the range trigger down here is what you get. Okay, all this is showing you up here right now is these things right here. You know, if I shut that off, it just gets rid of those. But you get, you know, with the range trigger down here, you get the base range trigger, the blue one that goes up and down, the overbought and oversold. So we're looking for the blue to get into the overbought, the oversold by itself right now. That's all we're looking for at this point. Okay. It's a different thing, but yeah. Here, go to and so what we are waiting for right now is for the blue to get somewhere by itself. Right? It doesn't look like this one's printing right, is it? If I shut that off. Yeah, I guess the black is right on top of the blue. Exactly on top of the blue. The NQ is just about leading right here. The blue is just leading the black by a tiny bit right there. So it is a valid trade. It doesn't have a lot of separation to it, but it is a valid trade. If you look at the bigger picture on that, this is the leg down. This is a retracement of the leg down. We're in a little bit of a chop here. It's a slow grind. It looks like a slow grind down, but it's a valid trade. Here, I'm putting it on. Okay, it's got to get down to 24, 25. This has to equal 50. And there it is. Stop to break even. I'm just going to lock in 1 point on that. Now, what it should do is get down to the swing low right here, but it's grinding, you see, so it's probably going to have a leg this big right here. Maybe just a 2.5 bar length leg. I don't know. It's excellent, Levi. Tell my son. I was meeting with my son last night in his apartment, showing him stuff. But he's a little older than you. About 8 years older than you, I think. All right, so this right here on the gold is a counter trend trade. You see the blue went into the oversold. We're below the YBR, so we should have a leg down, but you see we got a double bottom right here. It didn't really put in a higher swing right there, but what it should do is chop around right here a little bit. It's a valid long trade, counter trend long trade on the gold. Okay, here it is. Now that stop goes to break even after 4 ticks in profit. There it is. Okay, I'm going to lock in just a couple of ticks on this, because with the counter trend trade, I would expect it might get up here to the prior swing high right there at 16.0. There it is. There's 15, so we're going to lock in 9 ticks right there. Now, I know that doesn't look like much, but it was $900 with 10 contracts on. Okay, I would expect it's going to get up here to 16.0. All right, so see, now the blue led into the overbought right at the swing high. That's suggesting it's going to go down from right here at the swing high. Okay, so the way this is coming together is it's a little bit messy, but it's giving you all the indications what to do, when you should do it. And so far, we're up $1,100. And that little bit of a move right there. Between that one and that one, it was 11 ticks with 10 contracts on. So it's giving you all the right indications. Now this is spinning into some chop right here, okay? And that's not a bad thing. The divergent stuff is great for chop. It's actually bad for a trend. It's not bad, but it's not as good for a trend, but it's great for chop. And that is all that we have right there. I've run over a little bit, but I was a little bit late. So I guess we can say, and we don't really have anything happen. The gold, I mean, the ES right here is about to give us a trade, but you see it failed to put in a higher swing right there. If we get a down close on this, it's going to be in some chop, which isn't a bad thing. Okay. You're above the YBR, and if you look at it on a little bit bigger picture here, you got a higher swing there, a higher swing there, and you stalled out right here. So the bigger picture, if this is your leg down, so you crunch it up like this, and this is your leg down, this is more than a 50% retracement of that leg down. Okay, so a little bit bigger picture. This is your leg down. It's 50% retracement of that leg down right there. Either way, it doesn't have a trade right now. All right, so if you haven't taken a free trial with us, go here to mytradingiq.com. Click on the purple button right here. There is no credit card required for the trial. When you click on that purple button, it's going to bring you to this page where all that we ask for is your name, your email, and your phone number. Down at the bottom, gives you TradingView login ID. That's all we need down there is your TradingView login ID. Okay. If you give us that, then we'll be able to get you set up with your indicators indicating on your charts at the beginning of the trial. And so far this week, we're up at $870 a contract. On the month, $20,357 a contract. And on the year, $77,840 with one contract. Okay. That is it. With that, we can pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. If Dwayne is ready. He might not be.
Yep.
Nope, he is ready. He is ready. Okay. All right.
Okay, recap of the morning session.
Today it took 4 minutes and one trade to get to $3,750. 10 contracts.
Good job.
Thank you.
Alrighty, guys, we've covered all the markets. We'll take one last look at the daily and how we close today. Turnaround Tuesday is a real thing. Doesn't happen every Tuesday, but the date is set for one tomorrow. And how we end up closing today might give us a hint as to what to expect. Do we close above the daily BBC and the 38? Because right now we're off the high of the day, so we're just below both of them. But it's kind of quiet out there, so we could consolidate sideways. If we do consolidate sideways in this area, then blue and climbing is going to rise, and that will act as potential support. Just as all last week, the black step line, Monday, Tuesday, Wednesday, Thursday, Friday, we closed right on top of it. Even though we spiked all the way down here during the course of the day, that's where we closed. So to become a member, just send us an email, support@cfrn.net. In the subject line, put, I would like to become a member. In the body of the email, give us your name, your phone number. Not going to call you, but we'll send you an email that explains what it means to become a passport holder. You get 2 hours of live training every trading day. It's an interactive environment. Live trading and live markets while you trade along in your demo account as you're learning the strategy and how to read the indicators and asking every question that pops into your head. It's the best possible way to learn. Along with 2 hours of group training every trading day, which is something 9 out of 10 new traders don't have, probably more. But you will if you choose to become a passport holder. Along with the group training, you get private one-on-one mentoring. The strategy you learn, the indicators that you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames, from support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. This is why it's so important that you learn how to read the chart, which is what the Logic 247 alerts are designed to do, to help you learn to read the chart, so that you know where to expect potential resistance, where to expect potential support, which reveals the windows of opportunity between those 2 points. As a passport holder, you'll of course get the Logic 247 alerts as they're published. You get the concierge trade alerts every evening, the second they're published. Now, Logic alerts, they can come out anytime around the clock. The concierge trade alerts, they're published 5 minutes ahead of the open each evening, when possible, which I'm usually able to get it done every day before the open, except Sunday, sometimes Monday, but I always try to put a note in the Telegram discussion group to let you know if they're going to come out at 5:55 p.m. Eastern, 5 minutes ahead of the Globex Open, or not. I don't want you sitting there waiting for something that's not coming. Also, every Monday morning at 6:15 a.m. Eastern, you get the weekly trading zones. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. You're able to attend the members only workshop every Thursday night at 8 p.m. Eastern. And you get the golden key that unlocks all the private channels in Telegram. Everything a trader needs, all under one roof, one low price. You can learn more by going to mytradingiq.com. Okay, let's wrap it up with our good word for the day. Now, the last 3 days, we've been talking about being armed for spiritual warfare. Today's topic is try to be more flexible. James 3:17. The wisdom from above is willing to yield to others. Flexible people are happy people. They experience a lot less stress than the rigid types who insist on things always being done a certain way. One of the reasons inflexibility is so stressful is that we have to achieve our goals through thinking human beings who often have their own ideas different from ours. If you're not the type who is receptive to new ways of doing things because you view them as a personal rejection of your own ideas, ask Jesus, the great physician, to perform some corrective surgery on you. The Pharisees were the epitome of perfectionism and inflexibility. When they accused Jesus of not keeping the Sabbath, he said in Mark 2:27, the Sabbath was made for man, and not man for the Sabbath. How flexible are you? Are you so specific at home that your family stays on edge for fear of violating one of your endless preferences? Must the towels always be folded a specific way? If plans need to be changed, does it send you into a tailspin? Or do you stop and consider that maybe God has a different plan? Don't try to justify your behavior by hiding under the cloak of excellence. Yes, you would like to see things done in the best manner possible. However, seek to understand when your behavior leaves the realm of being excellent and begins to border on being an inflexible perfectionist who not only creates stress for yourself, but for others as well. The word for today is relax. Bend a little. Try going with the flow. And that's a good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.